Howdy, y'all. Welcome to Liberty Call. Today is Tuesday, April 25th, 2023. Hope everybody's having a fantastical day out there in the interwebs. It is a gloomy, gross day here in Colorado. It was sunny this morning, but we got a weather system coming through, and it's going to hammer us. It's going to start out with some rain, and then we're going to get up to about a foot of snow where I live. Granted, I'm not up too high. I'm only around 7,000 feet. So, to kind of put that in perspective, Denver is what, 5280 or 5820? I forget, somewhere between 5,000 and 6,000 feet. So we're a little higher than them, but the mountains right behind me, you can't see them from here, but I think the peaks are about 9,000 feet. So it gets pretty chilly out here. So like I said, we're going to get anywhere from 8 to 12 inches over the next 24 hours, probably stop snowing about this time tomorrow if the forecast holds. So cross your fingers that the power doesn't go out, especially this time of year when the snow is wet and heavy. Causes lots of problems. I mean, I've still got broken branches and stuff on trees from last May when we got some snow, and still haven't, some of them I haven't gotten to yet. So, but anyways, if it's your first time watching Liberty Call, thank you. I'm glad you're here. Give me some thumbs up, like, share, subscribe. I greatly appreciate it. Was an ugly day in the markets. I know yesterday when I was talking, or maybe it was Friday, it probably was Friday, looking at the long-term trends of the charts and, how, really was kind of, pointing out that the market doesn't really seem to have a direction. It doesn't know if it wants to go up, wants to go down. So, we shall see. My personal, belief is that it's going to continue to head down simply because the market hasn't bottomed out. I mean, we were, 3 years ago at this time when, COVID was, running rampant, was a huge distraction. I mean, we should have gone through the cycle we're going through right now back then. But, the Fed and our government created all that money, made everything seem fine for a few years. Well, not really. You can see all the inflation that we've created due to all the money printing and the, mismanagement from our government. But hey, there's nothing we can do. We're hostages here in America. So, all right, well, let's go ahead and jump into the numbers and see. Oh, hang on. Like I said, if it's your first time watching, please give me some likes, share, subscribes, follows, all that good stuff. Now we can get into the numbers. Got to stick to my script here. All right, the Dow Jones was down 1.02%, 344 points, closed at 33,530. S&P 500 was down 1.56%, closed at 4072. NASDAQ was down almost 2%, 1.98 to be exact. Closed at 11,799. VIX was up 12.37% today. It's currently up to 1898. Canada was down 1.15, Brazil down 0.7, and Mexico down 0.59. Over in Europe, a lot of the same. Germany was up 0.05, so basically flat. UK was down 0.27, France down 0.56, Netherlands down 0.92, Spain down 1.23, Italy down 1.03%, Switzerland up 0.4, and Portugal down 0.13. Russian exchanges were both in the red today. The MOX was down a third, and the RTSI was down 0.69. And the overnights in Asia, more of the same. The Nikkei in Japan was flat, up 0.09. Australia down 0.11. New Zealand down 0.1%. Chinese markets, Shanghai was down 0.32. The Shenzhen component down 1.48. China 50 up 0.43. DJ Shanghai down 0.53. Hang Seng down 1.71. And the Taiwan weighted down 1.59%. So like I said, it's a bloodbath out there, folks. And, I don't know which one of these leg downs is going to be the one that's going to be the final nail in the coffin, but be careful, folks. That's all I can really say is be careful with your money out there because, if you take too much undue risk, you could really get kicked in the nuts when you least expect it. All right, let's go ahead and jump over to the market recap. S&P 500 slumps as underwhelming quarterly results rattle sentiment. All right, get to my notes here. On Tuesday, the S&P 500 fell more than 1% due to disappointing earnings reports from several major corporations just ahead of the highly anticipated earnings results from big tech companies. Investor concerns were exacerbated by First Republic Bank's mixed first quarter results, which showed $104 billion decline in deposits from a year earlier, significantly higher than expected $40 billion decrease. As a result, the bank had to borrow significantly more, which is likely to negatively impact its earnings power in the coming quarters. Yes, S&P Regional Banking ETF also fell more than 3% due to the negative sentiment surrounding regional banks. Meanwhile, UPS reported first quarter results that missed on both top and bottom lines, and the company warned that the sales would remain under pressure, resulting in a more than 9% decrease in its share price. Despite the disappointing news, PepsiCo's quarterly results were able to sidestep the selling as the company's profit exceeded Wall Street expectations due to price hikes. 3M Company also reported earnings that surpassed Wall Street estimates and announced plans to cut about 6,000 jobs, but gave up gains to trade lower. McDonald's and General Motors also reported quarterly results that exceeded expectations, but they were still in the red. In the tech sector, a slump in chip stocks caused a decline just as Microsoft and Alphabet were set to report their quarterly earnings results. However, some on Wall Street remained optimistic about the results of these companies, with Neuberger Berman's Charles Cantor expressing confidence that large index contributors would deliver high-quality earnings and protect their cash flows. Energy stocks also experienced a downturn as falling oil prices raised concerns about the potential impact of slowing global growth on demand. In other news, Biogen's share price fell more than 4%, despite the Food and Drug Administration's granting accelerated approval for its ALS drug. The regulatory approval was conditional on further study to verify the clinical benefits of the drug. Overall, Tuesday's underwhelming earnings reports had a significant impact on the stock market, particularly in banking, transportation, and tech sectors. All right. So, like I said, not a lot of good news. I imagine the earnings reports this quarter are not going to be outstanding. I mean, there's going to be some, diamonds in the rough out there. There always are. But I think the general consensus is that, the economy's slowing, the markets are going to slide, in conjunction with that. So all you can really do is just be prepared. All right. Next up, U.S. consumer confidence hits 9-month low, housing market bottoming out. Consumer confidence in the United States dropped to a 9-month low in April, according to a survey from the Conference Board, which could lead to a potential economic downturn. The survey also indicated that many consumers were getting ready to tighten their belts as worries about the economy grew. The number of people planning to buy major household appliances over the next 6 months fell to its lowest level since 2011. Consumers also showing increased sensitivity to higher prices, with the effects of the Federal Reserve's rate hiking campaign to tackle inflation beginning to have a more significant impact. The Consumer Confidence Index fell to 101.3 from 104 in March. Although consumers view the current conditions had improved, their short-term outlook had worsened, as had the number of people planning to go on vacation or buy a house. However, some economists cautioned against reading too much into the decline in buying plans. Meanwhile, new home sales rose 9.6% to a seasonally adjusted annual rate of 683,000 units in March, the highest level since March of 22, according to a separate report from the Commerce Department. Buyers had been taking advantage of dips in mortgage rates to purchase homes. However, Selma Hepp, chief economist at CoreLogic, noted that, quote, the housing market continues to vary across regions and price tiers, but lower mortgage rates and low inventories have been helping in providing the floor for prices in markets where prices seem to have nosedived following mortgage rate surge, end quote. All right. So, looks like the housing market is maybe stabilizing, but, again, if we, have a major crash in the economy, that could certainly not help things there either. All right. Last up, this comes from Zero Hedge. It's titled Peter Schiff, Every Country Has Let the Inflation Horses Out of the Barn. And some of this comes from his podcast or video if you watch it on YouTube. So this is attached in the show notes. If you want to go back and read through this in its entirety or watch Mr. Schiff's video, feel free to do so. I listen to him every week. He is pretty good on most things. He's a bit of a gold bug. So, in his opinion, Bitcoin is the dumbest thing ever and gold is all you should ever buy. So, take what he says with a grain of salt, but his stats are right on. So, he usually is very good at, fishing through the garbage and finding excellent statistics. All right. Inflation is a global problem, with every country having let the inflation, quote, horses out of the barn due to the central banks printing too much money and keeping interest rates too low, according to Peter Schiff in a recent podcast. He highlighted the UK, where consumer prices were up over 10% on an annual basis in March, despite aggressive rate hikes in recent months, and the Bank of England officials passed concerns that inflation was, quote, too low. Schiff stated that nobody in England will be talking about low inflation again anytime soon, and it's clearly much too high, and there's still no way the inflation rate will be reduced to below 2%. Probably not even close to it. He pointed out that Japan, which had some of the lowest price inflation in the world, but it is still higher than 2%, and interest rates are still negative. Even with rising prices, the Bank of Japan is targeting the yield on the 10-year Japanese government bond at 50 basis points, while price inflation is over 300 basis points. Schiff believes that this will require a lot of yen to be printed to buy up all those bonds, which will lead to even higher inflation numbers. As the global inflation problem continues, Schiff believes it's bullish for gold, coupled with the continued trend toward de-dollarization. Schiff stated that central banks globally are incentivizing everyone to buy gold. If the dollar isn't the reserve currency anymore and nations are now de-dollarizing and setting up mechanisms for bilateral trade in other countries, then what is everyone going to do with these dollars? They will get rid of them, and most sellers of dollars would rather own gold than just pick up another random fiat currency, according to Schiff. Gold is now in a bull market in every single currency on the planet, and every country is offering negative real interest rates. Schiff stated that central banks around the world are divesting dollars and building up their gold reserves, meaning that there is too much downside risk That doesn't make sense. Meaning that there isn't too much downside risk in the price of gold and too many buyers beneath the market to buy who will take advantage of any opportunities. All right. So basically what he's saying is, if the fiat currencies like the dollar, the yen, all these, currencies that aren't backed by anything, if they start to slide and, things get worse, tangible assets, gold, silver, commodities, things like that are probably going to be your best bet. Again, depends on the markets and what's going on. But anyways, all right. Well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information is there. Hope you have a wonderful evening, and I'll talk to you next time. Adios.